It's Musk, and so it's all new. He makes his own rules. And, you know, even when it comes to mergers and acquisitions and contracts, apparently he thinks he can make his own rules. And perhaps he'll end up being correct here. But you do default to sort of the law. You do default to the contract to a certain extent. And so I'll lay that out for people as best I can, at least at this point. I mean, he signed a deal to acquire this company at $54.20. A lot of people point to that reverse break fee of only $1 billion. True, it's a very small fee, but that really only comes into play if there were regulatory objections that he couldn't get around. Then he'd have to pay that. This is about him already potentially being in breach of the merger agreement by casting doubt on the deal itself. It may be one reason why he followed up with that next tweet saying still committed to the acquisition. That certainly seems to have the fingerprints of his lawyers at Skadden Arps on it, saying, hey, you better put something else out because you're supposed to use your reasonable best efforts to get a deal done. And so that did follow. Interestingly, didn't do much to the stock price in terms of bringing it back up. And this is not a surprise in some way. The stock has been off all week, of course, with the weakness in the market. Its high was that last Thursday when he detailed all the equity investors who were coming in to join him in this deal. And we gave you some specifics in terms of the video presentations that he had made to those investors about his plans for the company. It was up in the 50s then. You can see where it is now. And there's no clear sign that this is going to change anytime soon. You know, if you're the Twitter board, where are you right now? Well, maybe you tell Morgan Stanley and Skadden and Elon, hey, we're going to talk to you this weekend. And if you don't make it very clear you're still committed to this deal in every way, we're going to potentially sue you in Delaware next week for breach. I don't know. That's one guess. Another is, Jim, this is a guy who makes his own rules. And until this deal is actually completed, it will always be in doubt. Does he want a price cut? Maybe. Would he get one? Who knows? Completely unclear at this point if you're the Twitter board, whether you just accede to some sort of price cut. If you did, you'd want a giant reverse break fee that would be applicable in all ways. But again, it's uncharted territory. It's Musk. I mean, I can't even tell you how many people, Jim, have said, well, was he high when he did the deal, or was he high when he tweeted that? I mean, what other person would anybody ever say that about? And yet, this is the world's richest person and its most consequential businessman because he's incredible in what he does, but he does it his own way.
Well, he's making a mockery of everyone, which is rather extraordinary, with the SEC, whether it be his law firm, whether it be the whole judicial system. But I will say this, David, the oddest thing, what he's saying that he may not be happy with is what he's been saying is why he wants to buy Twitter. All the phony accounts. Suddenly he says, I don't know, maybe there are too many phony accounts. He is so mercurial. Does he do it, David, because it's enjoyable?
You know, he must get some enjoyment out of it. As I said, he's a man who's always followed his own rules and to great incredible success the likes of which we've hardly ever seen in the business world. I mean, you know, I always come back to that. People can question him in so many different ways, but yeah, when was the last time you started a company that's sending rockets eventually to Mars? When was the last time you started an EV company that sells millions? I mean, you know, we can go through it. There's nobody like him. The Twitter acquisition, there's always been. Yeah, you had a paper route. You've done pretty well. You've done pretty well. But they're not going to talk about you in the history books. Sorry, Jim. But they will about him. Whether or not this is going to be one for the history books, I just don't know. Nobody does. Listen, his basic contention is that there might be fraud here. Remember, he waived business due diligence, said, I don't even need to do that. Now he's looking back at a 10K where they made it very clear, front and center, audited, by the way, saying, yeah, there are a number of false or spam accounts in existence on our platform. They performed an internal review of the sample of accounts. I'm just reading it right here. And they think the average of false spam accounts during the fourth quarter represented fewer than 5%. He seems to be saying, well, I'm not sure that's true. If he can prove that and prove fraud, he's out. He doesn't even have to pay his $1 billion. Or if he could prove some sort of material adverse effect. Both those things would seem to be very difficult for him to do, at least at this point, Jim. And so we're left just wondering where it all ends.
Yeah, look, I think you really got it down, David, because I think that he is able to get out, which, by the way, moves the stock of Tesla way up. Tesla's one of the key stocks in this market. Apple, Tesla, weirdly Coinbase matters, MicroStrategy matters. So you come in and everything feels a lot better because the possibility that he's done selling Tesla, which would make it the world's largest company again, just gives everyone great comfort.